Hello, everyone, and thank you for joining us today on the Dairy Signal. We're going to be diving into another Nexus innovation here very shortly. But before we do that, we're going to also talk about a little bit today in history. And I'm not going to lie, this one really changed up on me in the last half hour or so because it's a fun fact that we are currently in the next phase of living history, as many of you have probably heard if you're watching or listening to the news, and maybe if you're religious, it might be pertain to you as well. But the new pope has been elected on the second day of conclave. So at this point in time, the white smoke came out of the Sistine Chapel about a half hour, 45 minutes ago, if that, and they're waiting for him to show up on the balcony to see who the next pope is going to be. So that is an exciting fun fact for us here as we are currently living history. But let's actually dive into what we're going to be discussing here today, and that is not necessarily the history that we're living, but areas in which we can make maybe history on our farm. And that is through the aid of a company known as Bankbarn. And they are one of the Nexus Innovation finalists or presenters here with us this afternoon, as they were selected from an application process where they submitted a written and video application. And then a group of committee members that are all dairy producers came together and chose them as one of the 5 presenters that presented during March at our annual business conference. And if you weren't able to join us there at the conference in Madison, we're excited to have them on here today to talk a little bit about what exactly Bankbarn is and how it can potentially aid you and your farm. But joining us here today, I don't want to skip past our presenter, and that is Dr. Dan Little, who is the head of business development with Bankbarn. So, Dan, we're excited to have you joining us here today. It's good to see you again after seeing you in March. It's been little over a month and a half, if you will. So excited to have you back on. But would you mind giving our audience maybe a little bit of information about yourself if they haven't met you before?
Well, hello, Amber. It's great to be with you and be back following up on the Nexus presentations that we did earlier. I've been in veterinary practice and working as a management consultant, working especially in the areas of profitability and dairy management for the last 40 years, essentially. And I teamed up with Bankbarn here a couple of years ago. So I've been very happy to work with them in the area of heading up business development and working with the CEO, Scott Woodside.
Well, we're excited to dive into what exactly Bankbarn is and what it means to dairy producers. But before we do so, I do want to mention that if you're somebody who's watching live, you can ask your questions for Dan. We'll be taking them out throughout today's discussion. So you can use the Slido feature to the right of your screen if you're on a desktop device. And if you're on a mobile device, you can scroll on down and type your questions in below. And with that all being said, Dan, I'm going to hand it over to you to get us started.
Well, I'll go through a few slides that we talked about at the Nexus presentation, and let's see, make sure I stay on the right screen. Okay, but just a little bit about Bankbarn. We're working to enhance access to capital to help farms and agribusiness grow faster and more profitably. Bankbarn started out as a secure digital access to capital for dairy producers and suppliers. Our initial target was to provide tools to banks to enhance lending, but the market has really helped us to see that there's a greater need working directly with equipment suppliers and OEMs to provide service and access to capital for their producers and projects that they're wishing to implement. And so it is important. I want to point this out right away. The Bankbarn is not a bank, but rather is a service to source capital for projects, and we will be talking about dairy projects today. So it's a matter of us finding capital and helping it to be available for producers, for the equipment dealers, and for OEMs, and helping to deploy these various projects.
So, Dan, before we move on from this, and I know this might be something that you dive into a little bit more here, but I think it's really important, especially as we talk about Bankbarn as a service. It's not, like you said, it's not a bank. So how how do you secure that capital for the people that you work with and serve as business owners, dairy producers, or whoever they may be?
We're developing partnerships with capital sources. It could be private equity groups, it could be banks, uh, the other lending institutions that will set aside a certain amount of capital for projects like this. And Bankbarn is able to, uh, as long as we can meet the credit needs and the underwriting and so forth for this, we're able to work primarily on what we refer to as a scorecard loan. I'll get into that a little bit more later, but some of these loans are as simple as is digitally, going in on your phone or on the web and putting in some key information securely and uh, getting a pre-approval and and final approvals and so forth, just simply by working through the tools that we've put together at Bankbarn.
Well, thank you for answering that. I'll let you continue on because I know we've got a lot more to dive into and a lot more of the specifics that will really help put this into play.
Well, the next thing that I'd like to talk about, Amber, is just some of the challenges that we see with dairy financing. And um, one of them are producers tend to lack access to capital through traditional sources. Once they've set up their loan portfolio with their bank, um, it may be difficult to go in and make a change for something that they'd like to do during the year, especially if it's something that's in the operating line and it wasn't considered ahead of time. Projects may also exceed the concentration or limits for banks, and that's especially true for regional and community banks. They want to be involved in their community. They're very interested in dairy and other livestock operations, but they may be limited by the concentration of loans. And so with this, we could pull multiple regional banks together or entities so that they can participate um, in a credit. This is something that we're not currently doing, but that is definitely on our goal list to provide these services for other institutions. Uh, it's also typical, really the last 2 points are highly related. It's because the reporting lag is so great for many farms. Then leverage is restricted. And when I talk about leverage, it's simply, debt to asset ratios. How much debt can a farm carry for their assets? And typically, we'll have a situation that it may be quarters or nearly a year before the bank really finds out what was happening in the previous months. And we're working to decrease that reporting lag down to weeks or a couple of months. Some information we would have monthly, others it lags maybe by 6 weeks because we need to wait for the final settlement milk check and so forth for some of the financial data. But that really helps in terms of dealing with the leverage as well.
So, Dan, when we're talking about, dairy financing, I think of a lot of projects that can go on a dairy farm. And there's everything from building to new monitoring systems to anything else in between. And there's such a vast variety. And that also means that there is such a variety in the cost that a lot of these projects have. So is there a lending limit that Bankbarn reaches, or what does that look like for dairy producers?
Well, we have what we refer to as scorecard loans that are based primarily on the individual credit score of an owner or the key person in the dairy. And those are from up to one as high as 2.5 million. Uh, just a clear scorecard loan without really much of any additional information is up to 1 million. with just a little bit of general information on assets and liabilities and so forth, that scorecard loan can be extended up as high as 2.5 million. Then we can get into larger finance projects. It would be termed out for buildings and equipment and so forth. And that may be more like conventional financing, but still quite a bit faster because of the digital tools that we're working with.
Well, thank you for answering that question, because I know a lot of people who are listening, they're like, well, this sounds really great, but is this even an option? And it sounds like for most people that it will be a great option in terms of being able to reach some of those lending areas that they need to in terms of financing. So I'll let you keep going here, because I know we're going to dive into the how and the nitty gritty of it, if you will, here soon.
Well, before we jump into the how, I would like to share with you a concept called the DuPont analysis, and this was established back in the early 1900s by the DuPont Corporation. It was simply a way to look at the performance of various businesses that have different levels of assets, they have different levels of profitability, and they may have different levels of leverage in how they're gaining capital. And simply the DuPont analysis looks at the return on equity. Some may talk about return on assets, very similar, but essentially we're looking at the profitability of the dairy, and then we take that profitability percentage times how fast the assets are turning over. So an example of a difference in asset turnover would be a farm that has thousands of acres of land and a couple of hundred cows versus a farm that has 1,000 acres of land and a couple thousand cows. So that because most of the revenue is, in this case for the dairy, is coming in from milk production and some calf sales and so forth, but it's primarily milk production. And so that asset turnover is much higher when we are diluting out those assets like land that turn over very slowly. And the third part is leverage, and that's how well we're using other people's money. Essentially, that if the equity equals the assets, you have a leverage of 1. It really doesn't multiply anything. But if you're 50% debt to asset ratio, then you have a leverage factor of 2. And so the overall return on equity multiplies up. And so as we look at the projects, many of those projects that you just talked about, and we'll talk about those a little bit more again later and some of the services that we have. But we look at those and see, well, what impact might they have on profitability? Or what impact might they have on asset turnover or leverage? And in most cases, many of the things we're talking about have their highest impact is going to be in profitability. Many of these projects, when we're dealing with feed systems, with wearables, as you talked about, activity monitors, rumination data, feed push-up systems, we're either able to manage or measure more of what we're doing each day to figure out how to manage it better, or we can simply detect things earlier, all of which have a very high and rapid rate of return. And so by infusing something with a high rate of return, we can enhance this entire equation by increasing profitability without really increasing assets or even debt appreciably in the big picture. So I'll go ahead and move on to a little bit of the how-to and the Bankbarn score, which is helps to look at the financial health of the farm. It provides us immediate feedback. There's no credit check in any area where it asks for the credit score, at this point, you just put in what your credit score is, what you know the score to be. We do not go out and do a hit on your credit score for this part of the exercise. This is meant to be transparent so that people can learn a little bit more about what's going into credit scoring and what goes into the evaluation for loans. So if you can go out to bankbarn.io, not .com or .org, but bankbarn.io, and you'll come to this screen, and you simply sign in with your name, and you can go through some, let's see, well, you'll go through some questions, and then it will essentially provide you a Bankbarn score, and you'll see this up in the corner. And if you're up in the greens, that just indicates that there's a high likelihood that you would get approval. If you're way down at the bottom of the curve, before you get too concerned, we need to go to the next level and click through. And I did not include that in my slides today, but you can click through and see where the areas are. What are the strengths? What are the weaknesses? And maybe you just had an input error. Maybe there's a fat finger error, and you're missing a couple of zeros before a decimal point. So it's very, very flexible and helps the producer to understand what's going on as we go through this process.
So Dan, when thinking about this process, I think about, well, actually first, before we go to my questions, let's take the question that's on Slido. I think that's probably the better option of the two here. And the question here reads, does this loan sit with an individual or can it be positioned under the business?
Ultimately, the loans will be positioned under the business, but the approval is based on an individual or a personal credit score. It is not based on a Dun & Bradstreet for the company, for the scorecard loans.
Okay, thank you for answering that. And if anybody has a follow-up on that they want to learn more on, please feel free to type it in. But for now, I'll let you keep going here. I've got some questions, but I think it'll be better to hold them for a minute.
Okay, so the three core products that we're working with here are in the ag equipment finance market space. So this is where we would be financing wearables. It could be doing ventilation equipment, parlor remodels, feeding systems, robotics, considering the cost of a robot. That's well within the wheelhouse that we're talking about today. And the next product that we'll talk about is a buy now, pay later. This is used for supply and maintenance contracts, working with your suppliers so that you can gain savings on buying volume, buying all of the chemicals and so forth up front, but then paying on an even flow on a monthly basis. There may also be services that cause a higher than usual cash flow demand in a given month. And sometimes those are put off because cash flow doesn't allow for that expense that month. In this particular case, you can fund the entire supply and maintenance program with your equipment supplier, and then spread those payments evenly over 12 months. And the third area that we'll talk about are the Bankbarn insights, which speak to the reporting lag or decreasing the reporting lag that we've already talked about. For the finance, this is part of a dealer financing portal. And so here we partner with dealers and OEMs to provide these services so that they have the services that would be similar to what we see out in for crops and seed and so forth, where you can finance things with equipment dealers and so forth. And you do not necessarily have to do the financing directly with your bank. In this particular case, we're bringing that to dairy so that you can simply key in some numbers in your cell phone, add it to the secure data that's already on file, and get a pre-approval, an idea that yes, well, this looks like something worth working for, and then we move through the process. Sorry, I'm jumping through there too. So that some of the features of this marketplace is there's no upper limit on the project size. It just depends on how quickly we can do it. So the scorecard aspect caps out at 2.5 million with some additional information to the score. Fast credit app, and we're talking hours to days. The only liens are on the equipment itself. There are no second liens taken on other property on the operation that maybe already have liens by your primary lending institution. And probably about a 10-minute application, depending on how much data which you have available at the time. And of course, you get a free Bankbarn score, very early on as you put this information together.
So Dan, before we dive into some of the partners you guys have here, how are you guys able to make this process so much faster than a traditional loan? We know that hours to days is a pretty much unheard of when it comes to getting financing. So how is that possible in this situation?
Well, it's a matter of bringing the data, using information that we have in terms of putting it through an algorithm that can be used on a cell phone. And so it comes back to the Bankbarn servers, and it essentially is evaluating the very things that a bank might be looking at. Now we have different criteria for the scorecard loans because of their size. And we're really looking at technologies that have a very high return on investment. So it's a subset of the lending area. And by using technology, we can go through and say, well, does this look good? Does this look good? And the things that we are looking at are part of that detail breakdown in the Bankbarn score that we talked about earlier, that you can go in and really see where it looks like you might have some challenges or where you're exceptionally strong. But it's a matter of automating that. But the applications still have people looking at them to make sure that it makes sense. But we can do a lot of early credit work, just working through some of the algorithms and then using the secure platform that Bankbarn has developed.
So another question then on that, and you mentioned it a few times that a lot of these projects are something that have like a high or a fast rate of return on them. How is that decided, or how do you know if you're going to be going in and that the project that you want to pursue as a dairy producer is going to have that high rate of return that is determined or looked at by whether it be your algorithm, your people, or any of the cases in between?
That's a great question. The return on investment is determined more by the producer and their consultants, suppliers that they're working with. For instance, something like rumination data or cameras in the parlor or feed push-up systems. I don't want to exclude someone, but just to give some examples. We know that the data that comes from some of these systems helps us to change behaviors very, very quickly on the farm. And so a simple camera that's seeing a procedure or something that's going on the farm, that can be acted on quickly. And the between the producer and consultants and suppliers, they have a pretty good idea of how much that might change milk production or what it might save them in costs or what risk it is. And these are usually in months for return on investment. And so by being able to spread a technology out over, um, if it's a straight operating line, it would only be 12 months, but some of the pieces of equipment you can get out into the five-year range. Um, Buildings and so forth uh, are going to be variable depending on size because we're getting into there will be more variables to consider, but you're able to spread these out over a longer period of time.
Okay, thank you for that. And I think, it's a great way to think about some of the projects that people are already working on or maybe have on the back burner that you're like, I know it's going to make a difference, but we just have to be able to find the time and the funding to be able to do some of it. And it sounds like this is a great opportunity for some of those folks. I'll let you continue on because I know we've got a few more areas to cover here yet.
Well, I wanted to cover just a little bit more on working with the partners as far as the process, because once you have a Bankbarn score, and it looks like things would be generally good to use this tool, then it's important to get a project quote. Uh, uh, at that point, you can then submit an actual loan request. Now, at that point is when then we would be looking at the credit rating or the credit score. So that would be a soft hit to the credit score. And then there's a preliminary evaluation. And if approved, then we need to move on to prepare documents with a capital partner and put everything in order, get the documents signed so we can start project funding. I'll move on here to the insights. And the third set of services, I'll back up. I did not talk that much about the buy now, pay later. It follows very similarly to the project funding. It's just that it's a specific use to work with the producers and their suppliers to level cash flow for expected expenses coming in over the year. Not unlike an operating line for purchasing replacements or something that you're working with the bank on a regular operating line. Some fill in of some of those things can also be done through Bankbarn Capital. The third area is Bankbarn Insights. In this particular area, we're looking at integrating the production and financial information. Most farms have a lot of they have many different KPIs, but we do not tie it back to the finances. And in a big picture, we're actually tying it all the way back to the DuPont equation. But in this particular case, most things we are looking through the area of profitability. And 90% of the variation in profitability for a farm is going to be, or say 80 to 90% will be tied up in income over feed cost. The earnings that are generated from how much milk goes down the driveway each day and how much feed comes out of inventory. That bucket of money really pays for everything else on the farm, with exceptions of that there could be increased sales of replacement stock. Some farms are raising genetic animals, selling to other farms and so forth. So that can be a significant source of income. Calf sales have increased revenue on farms uh, over the past few years compared to what it was. But of course, that puts greater demands on purchasing replacements. So we're back to really heavily looking at income over feed costs and the inputs of that, but then also to look at how this fits into other areas of the financials with labor, um, replacements, and other needs that are coming through the profit and loss and balance sheets. So our goal with these insights is to get a monthly estimate in changes in EBITDA, and that stands for earnings before interest, taxes, depreciation, and amortization. And so it's really a cash flow number, and that's a key number that banks and anyone looking at credit want to know how much cash is available to be able to make payments on the outstanding loans. And typically we want that the amount of cash available to be in excess of 125% of the payments. So if you're paying out $100,000 a month, we would need to see $125,000 a month coming in for revenue. And you can just slide that up and down. If it's 10,000, then it needs to be 25% higher. So we over time, as we look at this information, we're then looking at modeling and using artificial intelligence and so forth to look at different patterns. And as we look at this data, then help to project where this data may be out 6, 12, and 18 months into the future. One of the things that we've also learned through the financial insights is it's a great communication tool for management and staff and suppliers because it speaks to the cash aspects and the profitability of the dairy without really opening up all of the financial records of the farm to everyone else out into the public. But we can look at some key financial indicators that are driving EBITDA and driving the ability to pay down loans and to be able to pay employees and to be able to repair and rebuild facilities. We can do all of that without opening up all of the financial records and look at that slot and help people to understand why something that's being done on the farm is important, or why we might want to reprioritize, or why management is jumping into this huge project that no one understands why we would ever do this.
So, Dan, I think that's a really great way of going through and thinking about some of it is having that ability to look at finances in a not necessarily different way, but in a way that people might have not been able to do before, or in a way that can help them understand what's going on within the business a little bit better. One of the questions that I have, though, when it comes to a lot of this, and oftentimes, especially in the dairy sector, we really build a good rapport with our banker. And that is a really key component for a lot of people, is being able to know that when they've got questions, or if something comes up, or if they don't quite understand something that they're seeing, and I'm thinking about this, maybe it's in the term of the score, or whatever the case may be, they're able to generally pick up that phone and give them a call and get an answer. So from your guys' side of things at Bankbarn, if somebody's got a question when it comes to whether they already have some financial or some projects that they're working on through you guys, or whatever the case is, what does that look like if they've got questions? Are they able to, ring up a person if need be? Is there a chat or an email that you guys work through, or what does that look like?
Uh, that's a great question, and remind me if I don't finish in all of your questions here or your comments. The first thing I'd like to comment on is remembering that Bankbarn is not a bank. We are not here to replace your lender. So that we would hope that as I talked about when we started out, this our whole idea was to support banks, and with the lending process, we have pivoted a little bit in the market because of the demand by suppliers and providing tools for them to implement projects that may not be fitting in with exactly with where the bank plan is right now, or it's in the middle of a year and uh, they don't really want to go back and refinance loans and so forth to put a package together. So this is going to be extremely uh, dependent on each individual farm and what they have for operating capital and working capital in the farm. But our goal first is really to support the bank to be providing even more information with friends, for instance, with the financial insights. That may be one of the ways that banks would get more uh, immediate reporting and decrease that reporting lag, because many of the things that we are reporting on will result in changes in the balance sheet or changes in the profit and loss at the end of the quarter or by the end of the year. And we're hoping to be able to look at what's happening in in a given month within a month or two after it happens, not a quarter or two or three and to a year later before we're really looking at it. Um,
So Dan, I
the
just wanted to
second
pause and
main,
say I didn't mean to allude that you like in the way of that you guys are a bank, and I apologize if that's how it came
not a
across because
problem. No, not a problem.
it's very clear that yes, I love the way you guys phrased it. It's supporting what you guys have already going on as a bank. I guess the real question within all of that is that because people are so comfortable with building rapport with people and they like to be able to talk to a person, what does that look like for Bankbarn? Is that an option if you're working on a project or you have a project going and you have a question about maybe it's your terms or the service or whatever the case may be within a project that somebody may have through you guys?
Yes, and that really it's all of the above. Being a technology-driven company, uh, we can work with text, email, phone call is great, but uh, they will get in contact with an individual, and we can get back to them. So there'll be one of us on the team to respond, and more than likely, whoever they're working with through the lending process will be the person their first contact. But that's very important. You're not going into a big automated uh, virtual assistant bank that you have to push 5 or 6 tones before you can get somewhere. You will, if you don't get us, if we're on something else and you get email, you will get a response.
And I think that that's what I was trying to get to is that is there a person behind it? I mean, I know you mentioned
Yes.
earlier that people are part of this. They do look at what's going on, but making sure that if somebody's listening, that they're not just going to automatically be like, well, I'm not going to do it because it's all online when there's people behind what's going on. So I'll let you continue on here, but I just wanted to make sure we got through that point.
Sure. Well, just in review, we've talked about 3 core products that Bankbarn is providing: ag equipment finance. This can be operating as well as equipment and also buildings in the marketplace. Uh, we've talked about the buy now, pay later plans that you can work out with supply and maintenance agreements. And then the Bankbarn Insights to decrease reporting lag, improve communication, and have a just a better understanding with your team as to how things are going financially. Uh, so I would sum up. People are asking, well, why Bankbarn? Well, we believe that we have competitive rates, flexible terms, faster approvals. It's simple and convenient. I would add that it's also secure, as you would expect any financial information to be, regardless if you're working with a bank or a credit card company or Bankbarn. It's security is extremely important to us. And no cross collateralization. That means if there's going to be a loan on something, it will be on the piece of equipment or the tool that's being funded, but that's where it stops. These are set up to be 100% financing, so that there's typically no money down in the loan for the loan, and there are other options and different things that we may be able to apply depending on the project and what the situation happens to be. So really, this is about driving demand, closing. We want to close faster. We want convenient financing for the OEMs, the producers, and the dealers. And we're just excited about being in this space, and we really appreciate all of the time that you've put into this and helping us to get our message out to the dairy industry. And I'd certainly take more questions if you have them.
Well, thank you, Dan. And yes, we've got a couple more questions that have come in, and I've saved these ones to the end because they're a little bit more on the nitty gritty, and they're probably, I would say, more also on the side of very much dependent on what the project would be, because this, I'm going to combine two of them here. It reads, what does your typical interest rates look like, as well as your typical loan payback timeline?
And that's an excellent question, and I don't want to frustrate the person asking this, but the interest rates will be competitive. They'll be competitive in the market, but they will be dependent on the quality of credit. But what we promise is being as transparent as possible. If we say that it's if it comes in as a lower interest rate, people don't usually ask a lot of questions. If it's higher, the transparency will help them to understand why it's higher. And is there anything that we can do to help to improve that, to get to approval? So we are on the other end of the line. Scott and I are handling, most of the questions and so forth at the present time in this area, but we'll be looking for, well, is there another way, a better solution to get to where they want? And especially the types of technologies. Many times the technologies that are being implemented will help to solve some of the questions or the concerns of credit and increasing profitability. So this might be a stepwise build.
Okay, and then let's talk about, they also have like loan payback timeline. What's the typical loan timeline? I do not remember if we actually talked about that or not.
That will be dependent on the type of equipment or tool being financed. So many of the wearables, things that are coming in, well, let me take that back. If it's something that works more in an operating line, that may be just over 12 months. So your supply contracts, those are annual contracts. It's expected that would be paid off at the end of the year because another year is going to start. So that would be an example of a 12-month payback for the annual amount spread over 12 months. Wearables and so forth would tend to be and other types of technology in the 3 to 5 year range. And then as you start getting into bigger pieces of equipment, robots, buildings, and so forth, that's going to move on up to in the 5 to 10 year range, depending on the equipment. And uh, this is not as simple as just putting a number in and the money's going to come tomorrow, but we do need to go through a process. But we are really working to help people see the transparency of this process.
Well, and I think it helps that what you're saying is these are generalized numbers, and this is very much dependent on project, and there's lots of variabilities, as we know, when it comes
Right,
to
right.
any and all sorts of financing. So, I mean, I appreciate you answering the question to the best of your ability, but I think and I hope people recognize that it can depend, and it will depend, depending on your farm positioning, financial situation, and so much more. So, appreciate that, Dan. And as we get to our end of time here this afternoon, because we've answered all the questions that have come through, from today's discussion, because we've gone through Bankbarn, what it can offer, and the different options and how it all works. But from today's discussion, if you could leave producers with one or two key things to be thinking about or actively doing after today, what would those be?
Well, good question. I think that the first thing I would suggest is that uh, people sit down with their team, with their suppliers, their consultants, ownership, and just talk about what technologies might we implement in our operation that they'll help in different ways. And then to get after discussing that, determining which ones they think would have the highest return on investment. They do not have to be ranked for Bankbarn to finance them, but that's a great place to start and work with the high return items before maybe you're doing something that won't have as much of a return. And I would say the number two is to go out to bankbarn.io and set up an account, do the initial Bankbarn score, get a feel of in general where things are at. If you have questions, get in contact with us. We can talk more about it. Then once if that is looking good, get a quote on the project that you'd like to do, and we can go to the next step of actually doing a loan request, and then going through a slightly deeper dive, but still fairly quick compared to what most people are accustomed to seeing in the dairy industry.
Well, Dan, thank you for not only your time here this afternoon, but as well as on the Nexus stage back in March and being able to provide producers with another option or opportunity when looking at funding options for different projects on their farm. So thank you so much for your time here this afternoon.
Well, thank you, Amber. And again, we really appreciate everything that Nexus has provided and time to get this message out. And it was great to participate with professional dairy producers of Wisconsin and interact with them as well at their conference. Thank you very
Well,
much.
Well, thank you as well, Dan. And I want to say thank you to those who joined in, watched live, as well as after the fact. We appreciate your time to learn a little bit more about a company that might be a fit for you and your guys' business. But for now, have a great rest of your day, and we'll see you here next week on the Dairy Signal. Bye now.